You've got to work hard for your success, and you've got to have a steady presence. That's the secret, Kid Rock. My friends, 10 to 15 minutes a day, that is all we ask. That steady presence each and every day in the marketplace is just what you need to succeed. Let's see what's going on in the markets. We see stocks up for the week. So are bonds. We see gold for the day is down. Bitcoin for the day is down. Let's jump into these charts. The S&P 500 for the day up 0.2%. We have a big green up candle. Price percent oscillator still negative, but heading up. Derivative oscillators losing downward momentum. Green up candle for the week. Check out the 2-day. It finished drawing. We have 1, 2, 3, 4, 5, 6. That's 12 days of strong up movement. 10 of those days, that's when we saw the the 2-day crossover occur. Derivative oscillator gaining upward momentum, continues to push up, even a little bit higher high over this last 2 days. Candle's getting a little smaller. What about the half day? Well, we can see where it had slid sideways up through, Thursday morning, and then really started pushing up Thursday afternoon, and not so much on Friday morning, but on Friday afternoon. Not enough, however, to cross over going up on that half-day chart. So we'll continue to watch, wait, and see. Is there going to be enough energy on this 2-day to pull the weekly over, or is the 2-day going to die, rotate back over, and hammer down? We don't know. But we're going to wait, watch, and see, and let these charts guide us. Right now, we don't have a trade on the S&P. We're waiting for the signal. What about the Qs? Quite similar. Not as much up movement. 2 weeks of up movement. Price percent oscillator a little bit further away from crossing over. Derivative oscillator losing downward momentum. 2-day. We can see that we've had 8 days of up movement with that 2-day included. Had 4 days prior to that. Now, as we watch, we can see prices well above that 2-day trend line. Nice big up candle. When we look at where things are going, let's check out the half day. And we can see, again, where it's been a quite steady rise as we've continued to watch things just move right up. A consistent and fairly clean half-day trend line well above the 2-day. And again, we'll just see what we're going to have happen. Is the 2-day going to die? Is the weekly going to cross over going up? Don't know yet. And the charts will tell us the right time. What about bonds? Bonds up for the day, 0.33%. An up week, but the derivative oscillator still losing downward momentum, a little bit of downward momentum this week. Price percent oscillator negative and heading up. Green up candle, the big wick on the top, little wick on the bottom you can see through there. We look at the 2-day, 4 days of decent up movement. We had that 2-day crossover going up back on the 27th. So again, just like stocks, we see there's a good bit of indecision right now with bonds, and we'll let that sort its way out. We look at the half day, we can see where things had popped up in the afternoon on Wednesday, did a little bit on Thursday, and then just sort of dropping Thursday afternoon, Friday morning, and then peaking up Friday afternoon. Price percent oscillator heading up, derivative oscillator green, but losing upward momentum. That is where we are on bonds. Next, we'll go to gold. Now, this was where we had the potential weekly vertical crossover. It did occur, but not as strong as we would have liked it to be. And let's get rid of, we were covering a line there. We'll get rid of that. There we go. We did have a weekly vertical crossover. We sent out the text messaging to let you guys know that. We talked about it on yesterday's show also. And that did occur. It is much weaker than it was looking earlier in the week. We can see that our green candle is a smaller candle than the prior week and did not reach as high a high. I can move that line away. You can see did manage to push through a little bit on that 50-day 50-week moving average, but not pushing through it. That's of some concern. And look, the derivative oscillator is still negative. What about the 2-day? Well, the 2-day was a booming there on the Friday of last week, Monday of this week, and then just started devolving since in a red spinning top to pretty much a red doji. Prices above the 2-day trend line. That price percent oscillator is flat. Derivative oscillator is positive, but losing upward momentum. So again, plenty of reasons for you to decide not to jump into that weekly vertical crossover with the weakness you're seeing on the 2-day, and check out the half-day. Half-day popped up. In fact, if you go back, you can see the highest was back on Friday, the 22nd of October, and that was actually in the morning. Lost some in the afternoon, popped up on Monday, and not quite as high Monday afternoon, and then down on Tuesday, sliding sideways into Wednesday, popping up Thursday afternoon and Thursday morning, and then sort of losing it all on Thursday afternoon and big time on Friday, recovering a little bit in the afternoon on Friday, but still not what we were hoping for. Wanted to see it a booming. So plenty of reasons for you to not make the decision to jump in. And whichever you did, I would appreciate it for your own sake if you're filling out your trade worksheet and you're making sure to list your reasons, what you were thinking, why you did or didn't, and then let's see how this moves forward. There have been much better crossovers, and of course what scares a few of us is what we had happen most recently, where things popped over back on the week ending the 3rd of September, and then immediately 4 weeks of down moves after that. So keep your eye on the price. Let's see how this goes. 3 up candles before, 3 up candles now. Let's see if this is going to take off. That's where we are when we look at our 4 big charts. Lastly, we go to Bitcoin. Down for the day, 0.51%. Now we can see some weakening. Look, we didn't hit a higher high, didn't have as big a candle, a much smaller candle, wick not topping out as high as it did the prior week. Consequently, derivative oscillator is still moving up, at that price percent oscillator weakened a little bit. Look at the 2-day, and again you can see 2 solid red down candles, a spinning top, and then a hammer. And of course, we've got the price percent oscillator positive, but heading down, derivative oscillator positive, losing momentum. And as we've watched this half-day chart, we saw where things topped most recently back on Wednesday, the 20th of October, and then trundling down maybe over the last day and a half, trying to get a little movement up. But that price percent oscillator still heading down on the half-day, derivative oscillator negative, losing downward momentum. So that is where we are as we end the day on Friday. We're hoping for a much stronger weekly vertical crossover on gold. Did not have that. We still have lots of flux in the market with the S&P, the Nasdaq 100, and 20-year bonds. That's where we are, folks. Got a great training that we put at the website for you. Hope that you get a lot out of that. We posted that this afternoon. It's not a video, it's just an old-fashioned article for you. So hope that you enjoy it. It's about how to become a great trader. It gives you a pattern, an outline, if you are really serious about doing this and want to succeed. Check it out at chartingwealth.com under the trainings. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters, and Patreon members, do not forget, we have something important going on this next week. That is Wednesday, the 3rd of November. We will have our live question and answer call-in Patreon session. If you're not a Patreon member, well, then become one so you can join us, and go ahead and start sending in your questions and the ETFs and stocks you'd like us to help you backtrack for practice trading. All the best from the whole team at Charting Wealth World Headquarters. God bless.